Hello traders and welcome back in a new week ahead video. This is Mohanad Yakout, Senior Market Analyst at Scope Markets, and today is the beginning of the new trading week. It's a Monday, the 6th of July 2026. Of course, we do have a couple of things to keep an eye on during the next week, or basically this week. First and foremost comes the FOMC meeting minutes. The first meeting under the new leadership, Kevin Warsh. What's the narrative? Is it a hawkish narrative? Can we expect to see more or interest rate hikes in the upcoming meetings? Or given the latest jobs report that we have seen during the last week, the labor market is basically no longer resilient. We have seen job gains fall back to the levels of 50 or 60,000 new jobs per month. The average wage growth is still positive and it's still moving higher. So those are some inflationary pressures. What were the discussions given in the latest meeting and how this could shape the narrative in markets? This is something that we definitely want to see during this week. The second thing is the Q2 earnings season that kicks off during this week. However, it comes into full force in the next week with big corporations and banks announcing their latest results. Moving on to some key levels I want to discuss with you technically during today's video. Those levels, those price levels are basically what we call as make or break levels during the week. Those are really critical on some key financial assets. I'm sure you would be interested to know. Please stick around till the end of the video so you can know everything I have to provide today. Starting with the economic agenda for this week, it's basically a light economic agenda. I cannot say that we do have a lot to be waiting for from the economic agenda. The top thing for me today, of course, comes the services PMI from ISM. Again, I have explained during the previous video or the last video, is that if the narrative for the Federal Reserve or markets are expecting higher for longer rates or even interest rate hikes, can the economy sustain this narrative or not? One of the key things that we will be looking at during this period are basically PMI numbers, whether manufacturing or the services sector. So today comes the services PMI for the month of June. The previous reading was around 54.5. Anything higher, of course, is bullish generally, and we can expect to see the dollar just bounce a little bit higher during the day. Tomorrow we do have the IV PMI numbers, the seasonally adjusted numbers for the month of June from the Canadian economy. However, on Wednesday it comes the big ticket FOMC meeting minutes. As we have explained briefly, what were the conversations happening during the meeting? What are the levels of, let's say, unemployment, or the levels of the numbers for the job growth or the new jobs that the Federal Reserve is currently happy to see. So when we were talking about the previous leadership, Jerome Powell and co, we were happy to see around the levels for unemployment, for example, levels between 4.2 and 4.5% were levels they were happy to see, and not say that those numbers are high for unemployment. Today we are back again to unemployment around 4.2%, mainly because the workforce is hugely affected by all of the immigration policies Donald Trump came with. However, wage growth is still high. We are talking about the new jobs falling back to the 57,000 mark after 3 months of job gains higher than 150,000 new jobs per month. All of those discussions are something markets will want to have some hints or guides for. What's the new narrative for the federal policy under the new leadership? I think and I hope the FOMC meeting minutes this week can provide some guidance to markets. Moving to Thursday, we do have the existing home sales for the month of June, and we end the week on Friday with the unemployment figure for the Canadian economy. Let's move quickly to some technical analysis here and discuss what we do expect to see on the charts, basically on the dollar index on the daily time frame, we are still rebounding or trying to rebound from the levels of support and demand formed around the levels of 101. We're still starting the week. It's the first daily candle. However, we have already managed to create a new higher high and break above the previous candle's high, which is for Friday. So this gives me a little bit of a bullish bias to start the week for the dollar index. I don't really expect to see the dollar much higher, much stronger during the next period, especially, as we said, after the recent jobs report. However, I do expect the dollar to maintain its levels around those high levels. So my bias on the, let's say, the medium term is I can expect to see a sideways range around the levels of 101.50. On the very short term, I can expect a move higher to the levels of 102 points. However, whether we break higher or not is yet to be seen. Moving forward to the euro versus the dollar. Again, we have broken below a really key support level here, a break. We have seen a break, close, and now we are in the phase of a retest. Again, we have already formed a new lower low, breaking below Friday's candle low. Again, this gives me a little bit of a bearish bias. I do expect to see the euro move lower to 1.1370 during the week. Again, same thing goes for the pound versus the dollar. A little bit of a double top here from the levels of supply around the levels of 1.34-ish. So as long as we break below the 1.3340 on the short time frame, I do expect to see a move lower on the pound versus the dollar index. Let's move on to gold. Pretty much nothing's happening on gold recently. On the daily time frame, on the big picture, we are trading indeed inside a falling wedge. It's a classical chart pattern. It's a bullish one, basically. So on the medium term and the long term, I do expect gold prices to move higher. However, on the short term, we can now see prices moving back a little bit after this move that we have seen last week. So a move higher last week. This week, I do expect to see a retest back around the levels of 4,070-ish. And then I do expect a move higher back again to 4,300, 4,400, and even $4,500 per ounce. Under one condition is that the levels of 3,900 are not broken below. This is my limit. This is my floor for gold prices. Anything higher, I'm bullish. Anything below 39, I'm basically changing my bias here. Moving on to oil prices. Basically, oil prices are back again to levels before the war in the Middle East, which is pretty strange. However, the levels of 67.30 is the key support. It's basically a price gap that we have seen here back in February. We are trying to fill the gap here, almost filled. And I do believe that this will act as support during the current week. This is one of the make or break levels I discussed at the beginning of the video. 67.30 on the WTI crude is something I do expect to act as support. However, any break lower will be really bearish for oil prices, which is low probability for me. Let's end the video today with a quick look on the S&P 500 here. We are pretty much still doing nothing below the key levels of 7,600. This is the key supply zone here. Basically, I do expect S&P to slightly trade in a sideways manner until the earnings season basically kicks off and shows, some promising numbers and so on. My best case scenario here is the earnings basically come mostly positive, which is something that we would see across the next couple of weeks. However, A break above 7,600 supported by strong earnings is something I really want to see, and I really expect to see. Above 7,600 is where we will be going for an all-time high. It's a clear bullish bias. However, below 7,600, it's a sideways range, and it's not even a bounded sideways. You don't have a clear resistance or support, so we will just be waiting on the sidelines until things get much clearer. That was all for today's video. Thank you so much for watching this week ahead, and I'll catch you guys in the next week. Thank you.